What's up, everyone? I'm Charlie Shrem, and this is Untold Stories, where twice a week we dive deep with crypto's most influential leaders to find out how this movement truly came to be. This show is powered by Blockworks Group, a media company with over 20 podcasts in their networks. Check them out at blockworksgroup.io. With that, today's guest is Bart Stephens, the founder and managing partner of Blockchain Capital, which launched back in 2013 and had so many different Bitcoin entrepreneurs and companies that they've invested in that are going public now, like Coinbase and Kraken, and has had thousands of entrepreneurs work for them and for their portfolio companies. They were the first company to launch the net asset value token, the blockchain capital token. They were the first company to invest in so many companies and arguably pioneered blockchain investing. I talked to Bart today. He was awesome. And I'll talk to you guys right in a second. I'm here today with Bart Stephens. Bart, thank you so much for coming on the show today.
Happy to be here. Thanks for inviting me.
So you were asking me like questions and things before the show and how we do the research. And it's funny, I like talking about this because people ask, but like laying in bed last night, I prepared kind of like the show. And the first thing I remember is as I try to like go back into old emails and old conversations I've had, and if I've ever talked to the people before, I've been to your office twice and I've met you guys. And I remember the first time I wanted to visit your office in California. You're going to laugh, but don't laugh at me yet. I remember like literally, I just wanted to touch the walls because at that time in 2013, when you had launched, there were no VC funds. So Blockchain Capital, it's like calling it like almost like the Bitcoin Foundation. Everyone's like, why do you call it the Bitcoin Foundation? Well, Blockchain Capital, because there was no blockchain capital. It wasn't there yet. There was nothing else. They're like touching the walls to see what is this existence. You have these two guys who know what they're doing. They're coming from the VC world. And now maybe our industry can actually grow. And you guys were not only involved in investing in some of the earliest and first companies. I want to hear your stories of some of meeting these CEOs for the first time who we know today, who have these crazy Twitter followings. And you guys also did some crazy things like launching the first NAV token, like net asset value token. And so not only just investing, but also pioneering in your own right. My first question is why?
So a lot of questions there, but I can start.
No, I'm sorry.
No, it's quite all right. Our firm started as cryptocurrency partners. In 2012, my brother and I were kind of getting out of the hedge fund business. So I started my career at E-Trade, which was kind of the Coinbase of its time. And they were bringing online stock trading to the masses and charging $20 for a stock trade. And, in 1997, when I started my career, Merrill Lynch was still charging $300 for a stock trade. So I kind of
really
started my career in arguably the first fintech company.
Wait, so was there such thing as like retail stock trading? Like,
there was basically discount brokerage trading over the phone. And of course, Charles Schwab was the pioneer of that model. Then there was quote unquote full service brokerage. And that was this kind of paternalistic model where your broker would tell you what to buy and charge you inordinate amounts of money for stock trades and commissions. And E-Trade came along and kind of broke that model or iterated on the Charles Schwab phone-based discount brokerage model. So I had a background in kind of financial services, and my brother and I were in the hedge fund business for well over a decade before we co-founded Blockchain Capital. And it was our experience actually as video game investors that would ultimately bring us to crypto, which is a common theme that you'll see through a lot of early crypto enthusiasts and entrepreneurs. I think Jesse at Kraken
and MedTech. A lot of med tech too.
Yeah, we did a lot in genomics and bioinformatics. But for us, the real aha moment was we were investing in video game companies through our hedge fund. And these video game companies had virtual worlds like World of Warcraft or Second Life. Second Life is another good example. Philip Rosedale is actually an entrepreneur in our portfolio. But these virtual worlds
he was one of the first people.
Currencies.
I think I probably hung out at his office, and I went to your office right after that same trip in 2013.
Yeah, you might have. And so for us, it was our prior career as a hedge fund manager investing in video game companies that basically were launching digital currencies. These digital currencies were not blockchain based. They were, in my view, the predecessors to cryptocurrencies. But we saw that in the real world, gamers put value in digital assets. And so when Bitcoin came along and we became aware of it in 2012, our mind was already open and expanded to this concept of digital money or digital assets. And so to your point, we looked around and we're kind of looking for funds that would give us exposure where we would be a limited partner in a fund, we would be a client. And after interviewing a bunch of people and talking to guys like Mickey Malka at Ribbit Capital or Wences or Barry Silbert, we had a series of conversations with early in kind of 2012 about partnering with him when he was still running Second Life. And ultimately, we didn't find like a fit. We didn't see people that a fund that saw the world the way we did. And the entrepreneurs we know in the sector really needed capital to help grow their business. So that's why we founded Blockchain Capital.
It's funny because all the stories and everything and all the circles that you're talking about, all the people, I've heard of some of the stories before, and what you're telling me, like I've heard from other people and how you guys got founded. It's so funny that you mention investing in video games, because I feel like there's a huge overlap on that. And we talked about medical technology. The producer of the show also used to be in med tech too. When you guys were like pre-Bitcoin, pre-crypto, when you and your brother were investing in video games, was the conversation about value had? Were like these companies ever saying, yeah, and we have this token? Were they using the word token? Were they talking about in-game currency? Were they talking about value? Were they ever trying to like take debt against that? You know how like airlines can borrow against their like loyalty programs. I'm trying to like create like a pre-crypto world of what normal people would talk about as value and tokens, and because there's not a lot about that in history. You can't really find a lot of data because Bitcoin and crypto is almost like overshadowed the world of, hey, we want to do digital money, digital value. I call it unfiated value, like by non-government decree, right? So what was that? What were those conversations like?
It was interesting that you asked. The lexicon was different, but a lot of the ideas were the same. So my brother and I were big gamers. We've grown up playing video games in our early childhood days, writing video games, eventually investing in video game companies. And what we realized is World of Warcraft heavy players is that what was lacking was provable scarcity. And so, for example, Charlie, let's say you and I were on a quest to go slay a dragon, and there was a chest of gold that dropped, and there was a magical sword that gave us some sort of power. What you and I didn't know was that magical sword the only one in the game, or were there 10 million of them? If there were 10 million of them, that magical sword wasn't very valuable. If there was only 2 in the game, it was probably really, really valuable. And so the terminology in the video game industry at that time was around real money trading. And so to exchange value, you basically had to work around the kind of compliance systems within World of Warcraft and Second Life. You would have to basically conduct transactions outside of the game. And there was certain risk in that around theft and fraud and stuff like that. So the aha moment for us was in discovering Bitcoin and the enabling technology of the blockchain was, wow, we can mathematically prove digital scarcity. And in fact, therefore, items can have value. Blockchains are really good for transfer of title, as you know. And so, one of the areas that we're investing in currently today at Blockchain Capital is still that intersection of video games and kind of crypto, because the demographics are very similar. It's young, predominantly males in Asia and the US that play video games like World of Warcraft or their kind of follow-on games, Fortnite, what have you. And that's the same audience that basically owns crypto. So the markets are China, US, there. Korea, and Japan.
There's a huge overlap of everyone who's doing that, of all the users involved in crypto. What type of other companies and projects did you invest in before crypto that kind of gave you the, not experience, but understanding of financial technology or provable scarcity? Because no one's really thinking about provable scarcity unless you're investing in video game type companies. So I know that you were one of the founders of Oncology.com. Was there anything in that relation that you kind of took to the experience of today?
So I've been, as I told you, I worked as kind of a junior executive at E-Trade, and that was my baptism by fire with financial technology. Then I founded a company, Oncology.com, which was really about connecting cancer patients and doctors and making sure they could get into the appropriate clinical trials. And we had a bunch of high-profile investors like Paul Allen from Microsoft and Mike Milken and Andy Grove. These were all cancer survivors themselves. And that was my first time as a founder of a startup company. Then I would go on to, with my brother, found a hedge fund firm and ultimately Blockchain Capital. So we've been a founder 3 times. And so the medical industry shares some similarities with the financial industry, in that they're both very regulated. They're dominated by incumbents, and it's really hard to be a startup competing against banks or healthcare insurance companies or hospitals. And so even though the industries are different, a lot of the challenges are the same, especially when it comes to regulation.
That's a good point. In the financial industry, in the medical world, and there are a few other industries that you're just so kind of burdened by regulations that scares a lot of people away. Very difficult to start. I didn't know a lot about regulations and things like that when I first got involved in the space. I didn't really understand the veracity and how things worked. And you can't really, in some of these industries, you can't really throw shit at the wall to see what sticks. Imagine if you were preparing a COVID vaccine and you were just doing. So I understand the need. I do. And you study political science, as did I. I think crypto has made us more self-aware of where we fall on a political, moral, social spectrum, right? Probably all over the place. Has it made you, personally, I used to be not a statist, but before I got involved in crypto, guys like Eric and Roger used to make fun of it. They call me statist. That literally was my nickname. Eric would walk in the office. Good morning, Eric. Hey, statist. What's up, buddy? Literally, that was my name. Not because I was a statist. I just didn't know better.
Yeah. That's pretty funny. I wouldn't have thought of you as a statist, but I guess it's all relative. My academic work in college really focused on the U.S. government's surveillance capabilities. So I was a political science major. I looked at national security studies at Princeton, and I did a lot of work basically studying the KGB and then ultimately the U.S. Government's various intelligence gathering apparatuses. And it became clear to me early on that early programs like Echelon and Carnivore, run out of the NSA and other three-letter intelligence agencies, were basically reading everyone's email. So I grew, after my academic work, I had a healthy respect for the technological prowess of our intelligence agencies and have become pretty paranoid ever since. And what we see in a lot of the early founders of crypto these are folks, and I put you in this bucket as well, that had a healthy rebel streak in them, that saw the system as overbearing, potentially corrupt, and they wanted to put a dent in the universe.
Thank you. I appreciate that, by the way.
They wanted to put a dent in the universe and make a form of capitalism that was more fair, more open, accessible to anyone with a mobile phone. And so, I think what we're seeing across lots of different kind of fault lines in the US and abroad is people at a very foundational level know that the system is broken. And you can see it in the protests and on the streets of Hong Kong, in Minneapolis. And so whether it's, the Wall Street, which is a system that makes rich people richer, or whether it is centralized internet monopolies using us all as kind of targets for their data mining, or corrupt political systems here and abroad, there is a yearning for a lot of the people in crypto to change the system. And we find that really inspirational. So we try to identify founders and partners that are building new businesses that will, over time, displace a lot of the incumbents, but incumbents don't go quietly. They fight like hell, and that's what we're seeing in the US regulatory environment right now.
Would you change that statement from the system is broken to the systems, plural? Because I feel like what I've learned is that there's not one system. There's just a million different institutions, infrastructure, systems that just operate inefficiently and clunkily. I don't know if clunkily is even a word, on top of each other. And so and they don't talk to each other, and they almost compete with each other in an inefficient way. I almost wonder, if we change that and crypto is almost this better system that's built on top of it that connects the old systems or makes a better one. I don't know, but that's kind of how I'm pushing towards now.
I think you're right on that. I mean, I look at the kind of blockchain / crypto system as a parallel universe. It is, and there's companies like Binance and Coinbase that kind of connect people from the traditional financial world to a crypto native world. Those are what we call the onboarders. And the right analogy, in our view, is kind of like what AOL did in the late 90s. AOL was once the largest technology company in the world because they were onboarding people to the internet from an offline world. And that's what we're seeing with crypto now. And so I think there's some commonalities in a lot of these systems, and what they are is they share centralized power structures, whether it's a political system, an economic system, or the technology monopolies. And of course, crypto has a set of values that we try to adhere to, which is around decentralization, transparency over opacity. And I think it's important not to just talk the talk, but to walk the walk on those things as well.
You brought up something great. You brought up something that I actually wanted to expand on because I was thinking about it the other day, and I don't have the answer, and you can help me figure it out. So I was trying to understand why only 10 years in, most of the companies from the early days just don't exist anymore. One of the early founders don't exist anymore. Most of the early tokens and coins from pre-2014 don't exist anymore. And I was trying to understand why in an industry that's so young and nascent. And so kind of what I was theorizing was, this includes me, this includes my company, these are things so why don't they? And then you have the outliers. Why does a company like Coinbase still exist? Coinbase launched so early and there were so many competitors that they just didn't allow for to even take any of their market share. Another example is BitMEX. And so I wanted to understand how those companies. And so do you want me to give you my theory or can I hear your theory first?
I'd love to hear your theory and I'm happy to.
So my theory is basically that the early companies we were building products. I'm going to say we were building products for us for that time. So you look at, we never focused on how good the websites looked. We never focused on how efficient is the infrastructure. Rather, can we just patch it together and make it work? We were building products and services that we needed for the industry but there was no industry for those days. So you look at the BitInstance and you look at for the local Bitcoins and you look at all these companies that a lot of the on and off ramps. You look at the early services companies that didn't even charge money for things like even the faucets or the early API companies that now charge money for API services, the early mining pools that never charged fees. All these companies that they don't exist anymore. So my thing is I feel like they were creating products for then. So you ask yourself what's the difference in other industries? I think we didn't believe our industry would exist 10 years. We didn't think or couldn't afford to build out products for the future because maybe was there even going to be a future? Eventually, when Coinbase had launched, they were able to say, okay, we're going to build the products to serve the needs of the community today, but we're also going to build products and services to build out for the community tomorrow. Now, if I realized this 6 years ago and I invested in all these companies like you guys did, I'd be a very rich man. But that's kind of my theory. And so the companies today that build out for today and for tomorrow are the ones that are going to be successful. And that's why those don't exist anymore. That's my theory.
I think there's a lot. I think you've got that mostly correct. I would add a few things. So, and some of the companies do exist. So we were a very early investor in Kraken. Kraken is doing quite well.
Perfect example. Yeah.
But many of the first wave of companies, you're right, kind of didn't survive. And so, I think that part of that is about the competitive dynamics, and part of it is your observation that people were kind of sticking fingers in the holes in the dam at the time, because all of a sudden there was an explosion of needs. That's why we founded Blockchain Capital. We realized that there weren't custodians and brokerage firms and ATM companies, and there was a bunch of, to use a civil engineering analogy, there was a bunch of bridges and roads and tunnels that needed to be built, and nobody was financing these companies. And so we raised our hand and said, we'll do it. And we did it with a very long-term goal in mind, that a lot of the infrastructure that we would be building 7 years ago by investing in these companies and working with these founders would pay off 10, 20 years down the road. And so I think the companies like Coinbase and Kraken that have kind of stood the test of time from, say, 7 years ago have been what you see in common there is talented founders that are working really hard, both in the short term, but also with an eye to the long term. And this is a really tricky industry. I mean, I find it humbling as an investor. The technology moves so fast from, say, a lab at Dan Bonet's computer science department into a production environment in a blockchain in less than a year. And so it's a very fast moving industry. It's really tricky as an entrepreneur and as a founder to, solve these immediate short-term problems, but also be building an enduring franchise for the long term. So that is the challenge of entrepreneurship. And the best founders and entrepreneurs try to recruit all the help they can get. And oftentimes that means, venture capitalists with domain expertise or past experience in financial markets, like the folks that are at our firm, to help them kind of, to use a video game analogy, level up. How do you get from the seed stage to the Series A, from the Series A to the Series B? How do you get to profitability so you don't have to keep diluting your stake down as a founder? And so all of those types of activities are what we do day in, day out here at Blockchain Capital, which is try to identify and partner with the best founders and do everything we can to help them level up.
You've also brought in, and you were the first VC fund in our space to do the entrepreneur in residence model. And you've had like 3 or 4 crypto OGs that have passed through your doors and have graduated. I think Spencer, Brock Pierce, I think Brock was a partner, Jeremy Gardner. So many people who have founded such amazing things have passed through your doors, like your alumni, and worked through so many people. You can probably put together some cool metrics. For example, I wonder if you look at, and I'd love to see some of these numbers. I don't know if you're allowed to share, but like how many jobs have been created based on the companies that you guys have invested in? So taking how many jobs are available on all these companies that you guys have invested in, it's probably, I'm going to assume in the hundreds, if not thousands. Isn't that such a beautiful thing?
It is a beautiful thing, actually. We're very proud of the folks that we've assembled at Blockchain Capital, both the current folks like my partner Spencer, who's next door here in our office in San Francisco, but also many of the entrepreneurs we've backed, the entrepreneurs in residence that have spent 6 months to a couple of years with us. And what you realize over time in the venture business is it is a people business. So we might be building decentralized systems with smart contracts where code is law and all of these ideas. But at the very end of the day, there are people behind these projects, whether it is a company that is capitalized with venture capital or whether it is a new protocol. The challenges are the same, which is, how do you build a product or service that the world really needs, and will they pay for it? And so, we spend a lot of time working in the trenches and on the front lines, effectively midlifing a new industry into existence. And so we have kind of an open door policy here. We often host meetups and hackathons and try to pair our companies with larger companies in the space so they can do business development deals. This is a lot of the company building.
Your office is in a great location too. I remember the brick wall. I think I was there when you first moved in.
Yeah, so we were at the Ferry Building, an office that you visited a couple times originally. And as we grew to 15 people, we moved into Snapchat's old space in San Francisco. And as you know, this is an industry that is constantly changing, constantly evolving. And so it takes a lot of research to stay kind of ahead of the curve and make sure that we're investing our capital wisely. I find that a lot of founders think that venture capitalists have endless amounts of capital or money that it just kind of grows on trees, but we all have bosses. We all have clients. So we manage money for institutions. Those institutions really want us to make good investments and hopefully make them 10 times their money. If we don't do that well, we get fired. And then the next founder, the next Charlie Shrem that walks in through our door, we don't have a check to write to him.
Yeah, you can't invest the teachers' pensions into Richard Hart's Hex Fund or whatever.
I won't touch that one, but yeah, our clients
with a 10-foot pole.
Yeah, our clients are institutions and family offices and hedge fund managers, and that's something that we've seen slowly over time. Is a lot of the kind of traditional institutional investors are finally taking this industry seriously for the first time. They've come to the conclusion that I've been talking about for years, which is this technology is important. It is here to stay. It's not going to be uninvented. Some of the best and brightest technologists around the world are running, not walking into this industry because they're inspired by it, the ideals and ideas around building new systems that are more fair, more equitable, and allow a global population to participate in investing in startups or protocols or new ways to protect your money from inflation in the case of Bitcoin.
That's a great quote. I'm gonna tweet that and credit you. You said Bitcoin or crypto or whatever can never be uninvented. It's a great
here to stay. I think it's already achieved escape velocity, and so the real question now is how big does this industry get, and how fast or how much time does it take to really start putting a dent in some of the incumbent financial systems, and will blockchain technology have applications outside of the financial services industry? We talked about the video game industry there. We were seeing an explosion of interest in DeFi, or what we call open finance, or stable coins and crypto dollars. A lot of the major companies are now attracted to these subsectors of the blockchain technology industry.
Okay, so it's great transition. Thank you. A lot of people still snub their noses at altcoins, right? You have, well, not altcoins, but like there's multiple layers of them now. So you look at like the big caps, as they call them. You have the Bitcoin, Ethereum, blah blah blah. And those you walk into a room with a nice suit and tie on, and you talk about some of these projects, like you know what you're talking about. You look good. Not you. I meant like in general.
Thank you.
There's no question that crypto and gaming have gone hand in hand since the early days of Bitcoin when it first launched. And in fact, that's what really drove mass adoption. Companies like BitCasino, which is the first ever licensed Bitcoin casino, and brands like sportsbet.io. I mean, it's the reason people are using crypto and Bitcoin today. Fun, fast, and fair. When you're using blockchain-based gaming, make sure you require that they are fair, because there's no reason that they shouldn't be transparent, because everything can be seen on the blockchain. Coingaming is so cool. It's an ecosystem of brands, products, and people that are serious not just about shaking up the gaming industry, but also the crypto industry. These guys have been around since the early days of Bitcoin. The CEO of Coingaming used to actually mine for Bitcoin and use the Bitcoin miner to heat his home in Estonia. I mean, those go down to like negative 25 degrees. So if you're cool about driving crypto awareness together, if you got a question or you just want to connect with your team of like dreamers and doers, the whole community, make sure you check them out. Coingaming.io, play some of their games, sportsbet.io, or BitCasino. Fun, fast, and fair. I'm Charlie Shrem. I'll talk to you guys right in a minute. You walk into a room and you start talking about how Link or how you just 10x'd your, on Elron or something like that or whatever. I made up some token name or whatever. It's kind of looked weird. But in 2002, taking off your bio, you and your brother not only like pioneered the strategy, but pioneered the term of nano-cap investing. This was pre-altcoins. It seems to me like this was the altcoin version of the stock world, nano-cap investing. What was like small micro-cap type of equities? Like, what was that like? Is that a fair comparison? Oh my God, I want to hear all about this.
It's a great comparison. So my brother and I started our hedge fund business in 2002, which was right after the dot-com collapse. And we had, my brother was working on Wall Street, taking internet companies public. I was working at an internet company at E-Trade, as I mentioned, and then founded a healthcare company. And what we saw is that after the dot-com collapse, investor sentiment on internet-related companies and businesses was at an all-time low. And so there were babies that were thrown out with the bathwater. There were companies that were profitable, that were growing, but they had a dot-com attached. And so my brother and I are fundamentally contrarian style investors. And so in 2002, when nobody loved the internet and internet stocks, we decided we wanted to take a look. And so you're exactly right. We were looking at sub microcap equities. So these were companies that were publicly traded that had gone down by 90%, that still had their venture capitalists involved. And we would go in and buy 5 or 10% of the company and reintroduce them to the world after they had kind of cleaned up their act. And so that type of small cap or micro cap, or the term we invented was nano cap investing, does have some application into what we do today, which is oftentimes we're backing a startup company at the seed stage or a brand new protocol. And these are nano caps. And something that's probably you're very aware of, as are many of your listeners, is smaller cap projects or earlier stage companies have much higher risk. They also have much higher reward. And so we're in the business of taking risk in a calculated way and maximizing that chance of reward by helping our companies get to that next level with regulatory advice, with business development help, with corporate development help, with recruiting. We have a bunch of tools in the blockchain capital tool chest that allow our founders to have a better shot at breaking through and having their product and service be embraced by either consumers or enterprise clients. And so our small cap investing in the stock market is in some ways similar to early stage investing in the blockchain technology and crypto industry.
It's so insane how that works. And what would you consider like micro cap or nano cap now in crypto? Is there like a number when you're looking at a project or a token or something that you're looking at?
Yeah,
it's hard to really say. It's relative.
The top 10 crypto assets are more or less kind of $1 billion type crypto valuation networks. And we would call mid caps probably billion to 200 million, and under 200 million in a crypto network valuation is probably a small cap. And sometimes we look at kind of next generation protocols that are nano caps that are, 25 or a $50 million network valuation or lower. And, those projects, again, are higher risk, but also higher return. And, we don't see anything that's going to dethrone Bitcoin in terms of store of value. I think Bitcoin has proven that it is, at this point, gold 2.0. It is a store of value that is inflation resistant, that is outside of the financial system. But there's a lot of other aspiring protocols and crypto assets that want to do something different than Bitcoin. And we spend a lot of time with the engineers and the people that are designing these protocols, cryptographers, experts in distributed systems, that are maybe doing something different, whether it's for supply chain or whether it's a new smart contract platform or something that's optimized for DeFi or something that is a stable coin. So there's all these kind of subsectors of crypto that we spend all of our time meeting with the founders and entrepreneurs and thinking and trying to figure out if ultimately customers will use this stuff. Because if you don't have organic people that are engaging in your protocol and it's just kind of small cap speculative activity, as we saw in the crypto crash of 2018, the results can be pretty disastrous. We saw that a lot of those nano cap coins go down 95%. That leaves a mark and hurts. You want to invest in the ones that are going up, and that's we've seen the venture business become a little more professionalized over the years, where we're seeing really high quality founders and teams that are trying to build distributed systems in a way that it creates value for not just the founders of the company, but also the engineers and the people that are building on top of it and the owners of these crypto assets. And so it's really around community building. And these communities are important.
If you look at like the past 10 years as almost, your past 7 years or 8 years or whatever in the space, if you look at it almost like a coronavirus chart, like we've all become chart experts in the past few months. What type of things have gone down and what has gone up? Like, for example, the quality of the entrepreneur that walks into your office, has that gone up or down? Other things like that.
Yeah, without a doubt, the quality of the entrepreneurs has gone up. I think when you see massive wealth creation, when you see new technology that is disruptive and that is banks are starting to worry about or governments are trying to wrap their brains around, I think we have a little bit of rebel in all of us. And so for crypto enthusiasts, entrepreneurs, founders, and investors, it kind of scratches that itch. People at a fundamental level have a feeling more than anything else that the system is broken, or the systems, to use your analogy earlier, and they want to be a part of something that's bigger than themselves, to create a new financial system that is more fair and more equitable. And so, those ideals are really compelling, and the founders that are drawn to them tend to end up in this industry. And so, the most popular
that is true
at Stanford's computer science department right now is machine learning. A close second is Dan Bonet's class on crypto. And so, I actually look at the computer science department at Stanford as probably a leading indicator of where the industry is going. And so I think it's smart as an investor or a founder or an entrepreneur is to keep an eye on where are the best and brightest computer scientists, where do they want to spend their time? Because that is a leading indicator of where a lot of resources, human resources and financial resources, will go eventually.
What are you seeing, though? What are you seeing right now with that? Recently?
We're seeing an absolute explosion of entrepreneurial activity really around open finance or DeFi at the moment. And what's exciting is, there are kind of real-time experiments being done on production blockchains with hundreds of millions of dollars now. And so it's an exciting industry, but essentially a dangerous industry in some ways, because even a mature project like Maker had a pretty serious problem in DeFi
that was crazy
last summer. And so there's a lot of experimentation, and I think all of us in this industry have a glimpse into the future of what the financial services look like in 10 years. And the bankers at JP Morgan aren't seeing that. The bankers at Goldman Sachs aren't seeing that. It's the young
leaving
graduates. But many of them, when they do see the light, we now are financing companies that founders used to come from Goldman Sachs or Morgan Stanley or Facebook or Google. A lot of the engineers at these internet monopolies are disillusioned with the business models of extracting.
Yeah, they're leaving. They're coming over to us.
They're coming over to our industry. Exactly. And so, I think people are disillusioned with Wall Street as it sits. They're disillusioned with internet monopolies that abuse their customers. And there hasn't been a place for these folks to go. Now they can go into the kind of crypto industry and build decentralized social networks or new financial systems around borrowing or lending. And that's incredibly exciting. I love coming to work and working with our founders every day.
Can I totally change topics for a second because you talked about the KGB? So you studied that. I actually studied the NKVD.
The military version.
No, I did. Well, so I studied and I'm fascinated with Russian intelligence from the years of like the Russian Revolution, around like the early teens, like 19, starting like around 1918, 1920 to like when basically NKVD became the KGB. I think around the time of like after World War II, around the time of the 50s. So, right, is that when the KGB was around the 50s? I think it was.
I forget. I'd have to go back and check my academic work, but that sounds close.
Okay, so there was one. So it's a cool story. I had a friend who also like studied this cool cryptography and like writable cryptography, and we started writing letters to each other when I was in jail, and we would do like cryptography. We would follow like some of these old spy cryptography that they use, for example, with the playing card system, where if you take a deck of 52 cards and you can predefine the order in advance, you can basically send encrypted messages to people anywhere in the world as long as they know that predefined order as well. And so, you have 52 cards. There's trillions of different orders that 52 cards could be into. So, no, it's funny that you talked about that because I love that shit. And I think there's a huge overlap when it comes to like early cryptography. Like when the Enigma movie first came out, like every Bitcoiner went to go see it probably on the day one.
I think I've noticed that too. I probably grew up reading too many books on espionage. But cryptography is an important part of our industry, distributed systems, engineers that understand protocol design. And our industry sits at the confluence of a lot of academic disciplines, whether it's kind of expertise in capital markets and the stock market, game theory, cryptography, distributed systems. And so it's a new industry that is effectively multidisciplinary, and that's what makes it so tricky. And it's also what makes it so intellectually enriching and exciting.
What enriches and excites you now is what I want to know, not just on a personal level. I'm curious to hear about that because I always want to know what motivates other crypto entrepreneurs and investors. But what is exciting in terms of investing? Like if someone walked through your door and they're like the perfect entrepreneur and they said, I'm building this, what would just make you excited? Because I have to say, the people listening to this show are those entrepreneurs and are those investors who may want to, invest in your next fund or whatever.
Yeah, so there's a bunch of areas of focus for us right now. DeFi or open finance is a huge one. We're seeing absolutely astronomical growth. Things like Compound or Aave or Maker.
It's crazy.
This is seriously impressive growth metrics. And a lot of this stuff, though, is still what I would say in the realm of kind of hobbyists and tinkerers. There's the people that are engaging in a lot of these DeFi protocols are fairly sophisticated folks themselves. They're not at a large financial institution. Oftentimes they're individual investors or they have people with deep knowledge of computer science. And so we're seeing whole new products and services being built that are novel and that the history has never seen. So to use Maker as an example, Maker's so kind of a community-owned credit facility, and you insert your collateral, whether that's Ether or Bitcoin, and you can pull out a stablecoin DAI and go use that capital more productively. But just to hit the pause button for a moment, that's the first time in human history that people have been able to basically take a loan from themselves and there's no credit analyst involved. It's an algorithm in a smart contract. And so, what we're seeing is new, more effective ways for capital efficiency, new ways to tap customers in different jurisdictions. What's great about these blockchain ecosystems is they're global. So you're not just rolling something out in one state in the United States and trying to adhere to all these arcane regulatory laws, but these are launched globally at the same time, which is very different than the internet in the 90s, where the US companies like Yahoo and Google, E-Trade, and others had kind of a 20-year head start on Alibaba or Tencent.
Yeah, we forget that. We forget that when the internet launched, it was largely an American thing.
Correct. And so what we see now in crypto that is different from the internet of the mid-90s is that this is a global industry. You look at Binance and BitMEX. These are monsters. I actually was recently going through some old notes, and you talked about who are some of the early entrepreneurs. I was looking at my notes with Arthur and BitMEX, and at the bottom of it says, "is not a Mexican Bitcoin exchange."
Oh my God, that's great.
So that was one of the ones that got away from us. Arthur's obviously built an incredible business and is hanging out in Hong Kong looking like he's having a lot of fun and making tons of money. But venture capitalists,
there were a few that got away too for me.
Always have stories of the big fish that got away. That's one of ours.
I could have seeded Coinbase. Like I was sitting in his house with Tony Gallippi and Roger, and I just scuffed my nose and walked away from Brian while he was still working for Airbnb. You know, it's like the one thing I wish I didn't have was that damn ego as a kid, because when I first got into this space, if I didn't have that, I would have done a lot better things and I wouldn't have got myself into trouble. So yeah.
Really, that's a very self-aware kind of observation that you're making. And
yeah, but I had to go to jail to get that self-awareness.
That's a tough lesson for sure. But what we've found over the years, investing in the public stock markets, in the private venture capital markets, in the crypto markets, we've seen bull markets, we've seen bear markets, is ego does get in the way. This is a humbling business, investing other people's capital and partnering with founders and doing everything you can to help them build their business. And so I actually think ego gets in the way. There's a lot of people in our industry that want to spend all their time on Twitter trying to look cool to one another. We like to work a little bit more behind the scenes to help our founders and entrepreneurs make sure that they can build an enduring business and have salaries for their employees that pay for their families. You know, we have thousands of employees at our portfolio companies that have that make a living in part because we were able to finance their business when it was unprofitable, and now it's profitable and growing. And Coinbase is a great example. Brian Armstrong is a remarkable entrepreneur. Mm-hmm. He is. The guy is constantly working. He's built a very valuable business, and those are the types of folks that we try to identify and partner with early. But you're right, ego can get in the way.
You brought up something so important that no one realizes. Our community, our industry is largely you have to credit the VCs and the investors and the angel investors especially, who, threw money at the most risky things possible in the early days. But what people don't realize is that what you said earlier was very smart. I want to add to it. You said that VCs don't have unlimited money. They don't have billions of dollars just sitting in accounts that's like ready to spend. So VCs have to go out, yourself included, and raise funds to then raise that money to go out and then invest in these companies. So while I could be like an entrepreneur and an investor and I have to sit and convince you to invest in my company, you have to go out to very wealthy people and institutions and pensions and stuff and convince them to let you invest their money in this crypto thing. Do you remember, like, what were those conversations like, that first fund? I mean, that must have been harder, like 10 times harder than actually raising any money for any crypto company.
So you're right. It's even more tricky than that, because oftentimes the people that you would solicit for capital to invest in a venture fund, these are people that have made their money in the traditional system. These are Wall Street type folks. So the pitch is kind of like, hey, Charlie, you're a billionaire that was a founder of Goldman Sachs, and I want you to invest into a company that's going to go try to make Goldman Sachs, a crippled type company. And so you're asking people to sow the seeds for their own destruction effectively. That's a tricky pitch. Plus, blockchain technology and crypto assets, our blockchain technology is an emerging technology industry, and crypto assets are a new asset class. There's a tremendous amount of education. I mean, I've met with thousands of institutional investors, and as recently as this morning, because we're raising our 5th venture capital fund. And so there's a lot of education, and people still have kind of, at first, usually an allergic reaction if they're from the traditional financial world. They think Bitcoin is still, being used for nefarious purposes or what have you. And if you want to start talking about open finance or stable coins, there's another, set of concepts they need to grasp. And so there's a massive educational lift to get investors to invest in funds like ours or Andreessen Horowitz's. And then we, in turn, go and invest in startups. So effectively, we all have a boss. And what we haven't seen in our industry yet is a lot of the companies go public or be acquired for big sums. And that's what institutional investors want to see. They want to see a return on their capital. And so when Coinbase goes public, or Kraken or Ripple or Digital Currency Group, those are 4 of the likely first IPOs, then funds like ours return money back to the investors with hopefully a great return. And then it's easier to keep raising more funds so we can keep supporting more entrepreneurs so they can go put a dent in the universe and pursue their dream of a new product or a new service or a new protocol.
Is that the best exit strategy for companies in our space, going public, or I guess, how come we haven't seen a bigger consolidation yet? Like, especially in the crypto ATM business, for example, or some other industries where there's just kind of no need to have so many that can consolidate better.
The short answer is regulation. I mean, the US regulatory environment has been uncertain for years. To use a traffic light analogy, the SEC, the US Securities and Exchange Commission, has, I think, done the industry and consumers a disservice. They basically are not telling founders the rules of the road. And so in absence of the rules, people figure out, should I drive 30 miles an hour or 70 miles an hour?
They do it through enforcement. Like, that's how we're learning rules, through enforcement. That's how every time there's an enforcement action, whether someone goes to jail or there's a big fine, that's where we get our clarity from. And I don't think that's the right way we should be doing things.
It's kind of like dealing with the KGB when you deal with the SEC. They will tell you, they'll get to that. So for that traffic analogy, they'll say, hey, Charlie, that's a red light. You can't do that. You're in trouble. Or here's a yellow light. We're not sure. We're going to get back to you in some unspecified period of time. Yeah. What the US regulatory authorities, until very recently with the OCC, they haven't given the industry a green light. How do we go forward? And as a result, a lot of the most talented entrepreneurs, a lot of the most interesting projects have been forced offshore. So you mentioned our token, which we issued as a kind of tokenized version of our third fund. We had to issue that out of Singapore, or Switzerland was another option. And Charlie, you were actually, working on a project at the same time. You were part of
I canceled it. I remember
for that. We were parallel working on different projects. You had a token that was backed by revenue around certain businesses having to do with outhouses, if I'm not mistaken.
It was a very simple concept. Yeah, business that's always going to be around, is always needed. I found one, a very old one that's always going to be around and always going to make money because everyone needs shit picked up. And it doesn't make a huge amount of money, but it was a proof of concept. We're going to raise $1 million and tokenize the company. Like, the day of, I chickened out. Well, and for that reason, the night before, I was like, I don't want to go back to jail. I was scared shitless.
Yeah. So you were trying to tokenize a business. We were trying to tokenize a fund. The ideas were similar. Yours was around, waste removal. Maybe it was the first shitcoin.
Yeah, it was the first shitcoin that I never launched.
And ours was really around, how can we make a venture fund that would be liquid, where a token would represent an ownership in that fund. And we did go forward with ours. We tried to do it in an SEC compliant way. We hired a bunch of fancy lawyers and did a Reg S offering for international investors and a Reg D offering for domestic investors. And that was the first security token. But the SEC really has a lot of work to do to give this industry a fighting chance here in the US. Otherwise, all the projects and the technology development will accrue to countries like China or Switzerland or Singapore. And so the US is at a competitive disadvantage at the moment.
Is it a problem largely in how our country is run? And what I mean by that is that you look at Malta or any country in the world, Singapore as an example, you look at any other example except for America, what they do is they create new legislation. Like, my friend is in the parliament in Albania, and Albania just is actually, I don't know if I'm allowed to talk about it, but Albania is about to release the most comprehensive legislation for cryptocurrency companies or digital asset companies in the world. But they can create new legislation, write it from scratch. Here, it's always been, and I'm very frustrated, it's always been about like applying old legislation to our industry. And it's kind of shitty because that's what you just talked about doing, right? Clarity, applying old, archaic. It's like almost like, when Thomas Jefferson was writing the Constitution, what did he say about, issuing tokens on Binance? How are you supposed to? It doesn't really make sense, but that's what they're doing.
Charlie, you made a great point, which is what the regulators in the US are doing are legislating via enforcement. So there are hundreds of subpoenas out in the field right now in our industry.
Millions of subpoenas out.
And this has been going on for years. And so, in some ways that makes for very poor entrepreneurship when, I like to say that the enemy of capital formation is uncertainty. And so if the founders and the investors in startups don't know the rules of the road, it's really hard to proceed. And so the SEC, in absence of any new lawmaking from our legislative branch, Congress, they're basically going out and kind of bullying the industry. And so what we need is effectively new laws. The problem that we're experiencing with the existing regulatory regime in the US is I once had to take my Series 7, which is what, stockbrokers, wealth managers, and hedge fund managers, and you have to learn a bunch of US regulatory code. And I don't remember much of it, but I do remember the years in which these laws were drafted. And the years were 1933, 1934, and the Investment Company Act of 1940. And so, these are 70 and 80-year-old laws that are not well suited to natively mobile, natively digital bearer assets, which are effectively what crypto assets are. And so there likely needs to be some new laws that kind of give this industry some breathing room. And by the way, there is precedent for this. In the 90s, the US regulators around the Internet of Information were the FTC, the FCC, the IRS. There was no sales tax on your Amazon order for a decade. And the Federal Trade Commission and the FCC that works with Spectrum worked with the Internet companies to make sure that they knew the rules of the road. And as a result, the US companies dominate the Internet. There's an argument they dominate too much. What we don't have is that clarity for the Internet of Value or for blockchains. And so hopefully that's improving. Last week, the Office of the Comptroller of the Currency came out and told banks, hey, it's okay to custody crypto assets. That's a guy by the name of Brian Brooks, who was...
That was a big deal.
It was a big deal.
Because it wasn't just about custodializing. It was about just a simple act as like, hey, don't be afraid to open up Bitcoin bank accounts. That's really what it was about.
100%. And, Brian Brooks used to be the chief legal officer of Coinbase. So he's very well schooled in the nuances of this industry. And you mentioned the ATM industry earlier. The problem, we've invested in ATM companies years ago, and we don't do it anymore because it's effectively a logistics business. How do you move physical banknotes around? And banks won't bank crypto companies still 10 years later.
It's the biggest problem I have. In 2016, I invested in a local Bitcoin ATM company. We had 11 machines at the time. Now we're one of the largest manufacturers in the country. We have over 120 machines putting out like 20 a month or whatever. Big, crypto ATM. We dominate the Southeast U.S. Company's very profitable, does very well. And as all regulations, multiple bank accounts, has Garda or whatever doing cash pickups at all the machines, all logistical. The issue is, like you said, is where do you go from there? And because VCs want to invest in companies that have exit strategies. What is an exit strategy for a company like that? Putting out 1,000 machines, 5,000 machines, or get bought up by a larger consolidation? So I think you're going to see a lot of that. There's a big issue with that. People are afraid to start companies here, and that's what I'm gonna leave it at. I think that there's almost a fear where if you're an entrepreneur and you're American, and I want to leave this, I want this to be like the thought. If you're an entrepreneur and you're an American and you're born here and raised here and you love this country like I do, like you do, where you domicile or where you base your company out of shouldn't even be a question.
I agree with you. Yeah, no, it's a shame. Listen, we should be encouraging the best and brightest young founders that are creating new protocols, new assets, new companies to do it here in the United States. And that's not happening now. Now, hopefully that'll change. I spend a lot of time in Washington, D.C., briefing regulators and trying to let them know that this industry is here to stay. It's not going to be uninvented, and we should be embracing it. This is a lot of these systems, these blockchains, these new products and services allow for better, faster, cheaper products and services that consumers will benefit from. And the SEC has currently got this paternalistic view that investors need to be protected from themselves. So there's no Bitcoin ETF except for Barry Silbert's that got grandfathered in. So Barry's in this privileged, almost monopolistic position where he's got the only kind of semi ETF out there, and his business is gargantuan because of it. And hats off to him. But what the SEC's real job is to have a level playing field and to make sure that there's no fraud in the industry and that capital formation happens in an easy way. And so I think they're being overly paternalistic on protecting consumers. And what they're really doing is protecting the banking industry.
Because that's what it comes down to. And you asked why laws don't get changed. Everyone knows that when attorneys work for various government institutions, they end up going in private practice after. So that's why a lot of these laws won't get changed, because our lawyers are the ones making money over the fact that there's no clarity. So I guess there's lack of incentive. Same reason the tax code won't change, because accountants and the accountant lobby or whatever won't change that. But at the same time, I don't want to end the show on a down note. obviously. Things are doing really well and getting better. And we're just merely pointing out like the small negative inefficiencies. Largely, I think as a country, but as like a world, this industry has grown so much in the past few years, and it is only getting started. There's so much more to go. We're not even, oh my God, we have not even scratched the surface. Like, people don't realize that the companies that we all have today, that we all interact with in crypto, they may well be the companies that will all be in a crypto museum 90 years from now. Think about that for a second. That's how early we are.
I think you're right. It's really exciting to be present and involved in the birth of a new industry. And that's what we're all doing. That's what your listeners are doing. That's what you've been doing. That's what we've been doing. And so, yes, there are some regulatory challenges, but they are surmountable. And what we see is that technology constantly is evolving in this industry. And so even if it happens offshore, it's happening is the good point, is the good news. And it's accelerating. And so we're at an exciting inflection point in this industry where sentiment is changing. Entrepreneurs are drawn to this industry. People are excited for these new financial products and services. And there's a global audience for it. And so I'm as bullish as I've ever been on this industry, but it's still early days. I 100% agree with you.
Yeah, I thank you. Thank you for coming on the show today. I really appreciate taking the time.
No, it was a pleasure, Charlie. I've been an admirer of yours for a long time, and you do great work. I love your podcast, and so I appreciate the opportunity to be on your show today.
I'll see you later.
All right, signing off from California.